Hello, everyone, and welcome to the Binance podcast. My name is Wei Zhou. I'm the Chief Financial Officer for Binance. So what I want to do with this show is to spend time talking to specialists, entrepreneurs, scholars, influencers, basically leading people from a variety of industries. Hopefully, through these conversations, we can share insights on how blockchain is changing not just these different industries, but also in changing the world. Here's a quick disclaimer. All opinions expressed by our host and our guests on this podcast are merely their own opinions. They do not imply any endorsements or opinions of their companies. You should not take these opinions as specific investment advice, as you will be solely responsible for your own investment. Hey everyone, and welcome back to another edition of the Binance podcast. Today, I have a very, very special guest with us. We have Rick McDonell, who is currently formerly an executive secretary of the FATF, and then also currently an executive director at the ACAMS, which is the Association of Anti-Money Laundering Specialists. Thank you for being with us, Rick. Rick has started off his career as a lawyer, but then over the last 30 years have been extremely active within the financial regulatory space, being the leading experts on anti-money laundering on a global basis. And then he was instrumental in terms of leading and then growing the FATF from a membership and also in terms of taking on different initiatives from 2007 to 2015, the executive secretary of FATF.
Well, good morning, Wade. Thank you very much for having me on your show. Yes, I was the executive secretary of the FATF.
Yeah, so we've met a couple of times, and then, I know your background, you're a lawyer, you had a legal professional training, right? We would love to learn about how did you evolve from a lawyer to a financial regulator?
Well, life has its strange ups and downs, I guess. I was working in private practice, and I was asked to join a national investigation of organized crime, a special inquiry, and I never left the crime space. So I moved from prosecution investigation into crime policy, and my boss long ago at the time, Solicitor General, asked me to establish a regional anti-money laundering group in the Asia-Pacific region, which I did, which is called the APG, Asia-Pacific Group on Money Laundering. And then I was asked to go to the UN as head of their global program against money laundering, a lot of policy and legal work in that space. Then the FATF asked me to come and head up the secretariat in Paris.
Yeah. Can you give us a little bit of background about FATF? I think it's still a relatively young organization. I think only been around, about less than 30. I think this year is the 30th anniversary of the organization, right?
That's correct. I suppose compared to many other international organizations, it's not that old, but 30 years is a long time. It's evolved from a handful of countries to now having a global network, and I'll explain that if you like, of about 200 countries, almost universal membership. But it's based on headquarters in Paris, with all of the major countries as members, and then regional offshoots around the world. There are 9 of those, a total of about 200.
And what is their primary role in terms of what they do, and then who are the members? Or rather, what type of are they government entities? Are they as a private entities? How does it work?
Well, the membership is by government, and it's a task force. It's not set up legally as an international body with a legal personality. And that was intentional because it was meant to continue to be a flexible task force, and that strength of that continues. But after 30 years, you can say it's de facto permanent. It's not going away. It comprises members from government, usually led by either Treasury or Finance ministries, Justice ministries, State Department people. And the purpose is essentially stemming from way back in the 1980s when narco dollars, in other words, money being laundered from narcotics trafficking, was becoming a big problem. And it's morphed into the recognized international standard setter for all anti-money laundering, terrorist financing, and proliferation and financing of weapons of mass destruction as the standard setter. So it sets the international policy rules, and it examines countries' performance and compliance with those rules. And from that, each country in the world who is a member of the group, as I mentioned before, they have then national laws put in place by their own countries, and they have regulators looking at how the compliance is going nationally. But the FATF double checks that on a cycle of country examinations.
So it's kind of, I'll put it in layman terms, it's kind of like an organization that oversees, international organization, task force per se, that oversees each individual countries. I would say monetary or banking regulations or money-related regulations to make sure that they follow these international standards that gets set by the group.
That's a very fair summary, yes.
And the couple of things that I found really interesting in your background is that you started off, I think, in Australia, right? And then you were I think you were very active in terms of building up the regional task force in the APAC region. And I would imagine in the early days, even more so today, the regional activities and focuses are very different, right? How has that evolved since you've been working in this space?
Well, there are differences and there are similarities. In terms of crime, criminals are, how should I say, they're as inventive in one region as they are in another. But in a more interconnected world these days, and the capacity to move funds and money and value so quickly, there's a lot of commonality. So essentially, yes, there are regional differences, what types of crimes, where, the way in which the justice agencies are set up and their capacity. So there's those kinds of implementation and enforcement differences. But frankly, I would say these days that the major types of crime that originate proceeds of crime are pretty much the same all over the world, whether it be drugs, white-collar crime, fraud, embezzlement, cyber. All of those things are fairly prevalent. So the purpose and the common standards of the FATF and the common examination standards of the countries shows a lot of similarity in terms of crimes.
Yeah, so I think that was one of the points I was trying to get at, is that I think maybe in the early days, there are regional differences. They are converging per se, so that the rules have become much more applicable on a global basis with less, I would say, less differentiation amongst the regional, or the less regional biases, I guess.
Yeah, I think convergence is a good word because that's happening across the board. Not only because of the smaller world we live in now, but because of greater efficiency, if I can put it that way, of organized criminal groups in particular. Although the standards apply to all crimes and all people who commit proceeds of crime-generating crimes, you can see over the last 10 to 15 years, major international crime groups themselves converging, as I say, a marriage of convenience, depending on what kind of criminality they're expert in.
I see. And this comes back to probably my first interesting question that some of our listeners, what is the most interesting case that you've come across, or the biggest impact that you see in some of the cases or the organizations you've been involved with or taken down?
Well, that ranges across a number of different areas. I've done investigations with police task forces and specialist people over the years into, I won't name particular groups, but what might be roughly described as ethnic-related criminal groups, of which there are many, stemming from certain countries, but now global. That's involved drug trafficking, that also sometimes involved different investigations into large-scale fraud, so sometimes in the hundreds of millions of dollars range. So for me, I think the interesting thing has been the spread of the types of crime, the interconnectedness of the criminals in the sense of how professional they can be, and the difficulty of getting information to conduct a case and bringing it to prosecution. So in some senses, that problem is become a little less problematic because the capacity to exchange information by government agencies has increased manifold, but the capacity to hide your money has also increased. So it's a constant struggle. So for me, personally speaking, I've always enjoyed the chase, if you can put it that way, if it's international in particular.
My closest experience has been watching movies. Basically, always follow the money. is the way to catch criminals. And going back to sort of what you've been doing since you left the FDF, you're currently involved with an organization that I don't think people not in your sector, people not in the I think the banking and financial sector are that familiar, which is the Association for Anti-Money Laundering Specialists, or ACAMS. Can you tell me a little bit about ACAMS?
Yes, sure. Happy to. Well, ACAMS stands for the Association of Certified Anti-Money Laundering Specialists. The certified is the important bit, as is the association word, because mostly the people who are members are compliance officers in financial or non-financial institutions who have responsibilities under law to report suspicious transactions and conduct risk assessments of clients, customer due diligence, and all of that. So at the moment, we have approximately 72,000 members globally, and that's growing very rapidly. I would expect that to get up to 100,000 in the next year or two. And what ACAMS does is to provide itself as an association. So even though it is a company, it is comprised of people who are working with the same type of backgrounds, and they have a networking capacity as through their membership. So in other words, it's a real association of members who have a sense of duty in this area. Secondly, it provides certification and training. Certification meaning if you get what we call a ACAMS certificate of anti-money laundering specialization, then that is something that sets you apart in this space from someone who does not have that qualification. In other words, you can market yourself and to get promotion more quickly and easily. So it does provide a level of expertise as well as the association and networking. And we have a lot of publications. We also have podcasts. Hopefully we could have you on one of our shows one of these days to spread the word in terms of Binance. So it is a very growing market. I think one way of putting it is I've seen around the world, and we have a membership in about 65 countries now. People proudly wear their little gold badge which says CAMS on it, Certified Anti-Money Laundering Specialists. I've even seen this in Kabul in Afghanistan, where compliance officers do proudly wear this badge of certification. So it's a good organization because it spreads, I should say, or covers both the legal requirements, but also the sense of family, if you like, as between people who have the same job to do. And this is not an easy one, being a compliance officer in this space.
Yeah, because I think most of the members work within some kind of capacity within financial organizations, right? And then within my experience, I worked at an investment bank for about 5 years. My experience is that compliance is there's always a challenge, I think, between the front office and compliance, which gets relegated, I think, to the back office, and growing the business versus sort of like, I would say, caretaking the business in terms of managing the risk that has to do with a lot of times when you are dealing with money.
Yes, you're right. And that's what I was hinting at before. Maybe I should be a little bit more blunt and say there's always tension between sales, which is profit-making, and compliance, which is costly. But the way we look at it is that, yes, you have to obey the law, but it's an insurance policy. It's an investment in not going the wrong way and eventually costing your company more than if you didn't have it.
Yeah. Or one of the books that I read is The $1 Billion Whale. I'm not sure if you followed the one IMDb incidents as well, because that's quite significant in terms of its coverage in Asia, more so, and especially in Singapore and in Southeast Asia, in terms of the impact it has had and on the different people and the groups and organizations it's impacted. It's just that one of the characters involved in there was actually an executive director of mine, this Tim Leisner, when I started off my career as an analyst in Goldman. and then he was the central character in the one IMDb saga. And I just sort of like looking at it, it's just like, man, those guys put money before what is right and blindly followed the money in that situation.
Well, even though I've been doing this for a very long time, I've never become jaded with the ingenuity of how greed drives some people. Mm-hmm. So many different mechanisms. And you have to admire, if I can say this as a former prosecutor perversely, you have to admire the ingenuity of how people not only break the law, but how they hide their money and convert it into usable, hidden.
Well, in that case, I don't think they hid it at all. It was pretty much, there's no hiding there. Yeah, there is no hiding in that situation. And I take that.
This is where the convergence of how should I say, the people's voice sometimes correlates to the reality of problems, because in that case, at least the people of Malaysia chose to change the government. Mm-hmm.
No, absolutely. I think maybe 10, 20 years ago, before the internet, before you have transparency and before you have Instagram and Facebook, people can spend their ill-gotten gains in other regions and not be noticed. And that doesn't really exist, I think, nowadays. So it makes it much harder.
It does, but you'd be surprised. I mean, especially in new products coming up, including virtual assets, as you may be much more familiar with from an operational point of view than I am. This is an area where there's a lot of vulnerability potentially, and that's why the rules have to apply to the new world of digital as well as the old world of cash.
For sure. And that takes us to the next segment. What do you see as the biggest challenges facing not necessarily, I would say, the industry, but actually anti-money laundering professionals today? Because I think as sort of an executive director of your organization, you have to be an advocate for your members, right? Because I think they're dealing with challenges that probably didn't exist, 5 years ago or even, right?
Yes, exactly. And some that, are popping up on almost a weekly basis. I think one of the biggest challenges, at least in terms of financial crime generally, not just money laundering, is the use of cyber to attack systems. I mean, people, the man in the street might be familiar with, identity fraud and theft from their accounts, but that equally applies to organizations and banking institutions. We've seen, for example, over the last few years, several banks who've been hit and money gone instantaneously in very devious and clever ways. So I think one of the biggest challenges is that how to keep your IT systems up to speed to protect from not just hacking, but cyber theft and identity theft. So that's one of the biggest areas I see growing.
And do you see because I think if that's the case, then I think education would be a big part of that process, right? Because it's not just organizations protecting themselves; it's individuals have to protect themselves as well, like individuals. Because I know one of the biggest things we face at Binance is that a lot of the hacks and the frauds happen on an individual basis, because of the ability for perpetrators to find weaknesses in behavior habits and also in, sometimes just in the telco networks.
Yes, that's right. I think, I don't know if anyone's actually done a survey. Perhaps they should, if they can find the data, to see how many people in the world have been hacked individually. I think it'll run into millions myself. But I think on the other side of the coin, the capacity and capability of individual criminals and more so organized criminals, which is becoming more and more the case, I believe, who have a capacity to attack individuals and institutions with a growing level of skill. So I think that, yes, individuals are hacked, But who's doing that? It's not necessarily one individual criminal to another innocent party. It's an organized system of hacking and theft. And your firewalls and other protections have to be up to speed. So coming back to your question, yes, education and ensuring that the systems are as protected as possible is another, how should I put it, another niche growth area for professionals in terms of this area.
Yeah. Like just for example, I don't want to talk about Binance again, but I think for us, we face a countless number of attempts at us. And I think that's probably true for all financial, related organizations, especially in our industry where the assets are digital assets. They're not really physical assets. So the ability to get access, to take ownership and then move is much, the velocity of that is much faster than I think in the traditional space. So at least for us, we take, the sense of security that we put into it is more than just sort of, I would say, online security. There's a huge element of offline security that we take into account as well, which kind of reminds me of like, yeah, go ahead. No, that's okay. Go ahead. It reminds me of early days of like when gold were first stored in banks. so the physical safety of that is actually becoming more important again.
Well, absolutely, the hardware and the software, exactly, and that's why digital assets and virtual asset service providers are now one of the newest but most important areas for how do you effectively not only protect yourself, but how do the authorities try to ensure that in a space that's moving so rapidly and does have an element of anonymity attached to the transactions, how do they cope with that? How do the asset service providers comply? What are they required to do? This is a space that's very new in terms of regulatory compliance, but one that's highly important because in the old days, we can talk about that, it was not so hard. You could find a criminal, you could find the assets tangibly. Now you have to have detectives who, in terms of investigations, do it very differently. But you have to have systems in place where you can actually detect where money is coming from and going to. And digitally, that's much more difficult in many ways. With blockchain, of course, you can get immutability of the transactions, but what do you do about actually knowing who the people are who were involved in the transaction from beginning to end? That's one of the biggest issues.
Yeah, I think that brings us to my next question is, I think with regards to both sort of the digital domain versus the physical domain, right? Like one of the things that, the biggest challenges for people in our industry is actually the opening of bank accounts, right? Because with traditional bank account opening, you always need a proof of address. for someone who doesn't really have an electric bill or don't really have a gas bill, it's actually challenging sometimes to open bank accounts. Whereas I think I think for that, it's kind of like, for me at least, I feel like a little bit antiquated whenever I get to a proof of address kind of a thing. Sometimes it'll just happen to be maybe my parents' address where I had or I at least have an address. It's how do you see that problem, or how do you see that? Do you see that being evolved? Because knowing where a person resides is very different, right? Whereas I think for us, at least for financial institutions where people log in, we know your IP history. Right. So for one of the things that we do track is that if you historically been using these 4 or 5 IP addresses and all of a sudden a random IP address pops up, we're going to warn you, be like, is this you? Right. Because I think that's one of the advantages, I think, of like, your digital ID or one part of your digital domain. Right. Versus sort of like your physical domain.
Yes, indeed. There is a big difference, but then also a lot of similarity. I mean, if it depends on how reliable your identification processes are. I mean, companies providing virtual assets or as an exchange or whatever. How reliable is your identification of the parties involved, and that requires a lot of checking. It also requires, I think, a lot of risk analysis, because risk is also a requirement of the international standards. So maybe if I back up for a minute and say that all of the standards that apply to, can I call it the analog world?
Go for it. Go for it.
One, are now required since this year to be applied to the digital world. So, for example, FATF standards, they call them recommendations, but they're standards. Recommendation 10 is about customer due diligence, identifying who your client or customer is. And that rule applies now also to the digital space. Some in the industry say that's really, really difficult, because you might have very, very small virtual asset service providers who deal very rapidly with a non-identifiable group of people sometimes, and the risk is high. What do you do then? Don't take them on board. Others say that, yes, as you just mentioned, the capacity to identify is not as hard as it might first seem. I think that the jury is still out on this. The FATF has basically said that they're not going to arbitrate as to which products and people should be covered, that it's being left to the industry to meet the standards, which are the same for the traditional finance industry. And there's a 1 year, how should I call it, a breaking in period from June this year until June next year to see how this is working. So I think the onus at the moment is on the industry in the digital space to come up with technical ways in which they can meet those standards. And the basic one is customer due diligence, as you've just said. So I'm relatively confident, but not 100% that can be done in a comprehensive fashion.
Yeah, because how do you want to put it? Because there's two layers to it, right? Like you have one layer which is customer information, right? It's just sort of like some users, people come into cryptocurrency because of the certain level of anonymity, right? That they can get involved. And then I think we do see criminals sort of taking advantage of that and then using, even some of the early adopters of Bitcoin or, criminal elements. But what you do get within blockchain is the immutability of transactions and the transparency of the transactions, so that all the transactions are recorded, right? And then there is an address, right, or a transaction history that's immutable on the blockchain that's recorded. And the individuals or whoever's behind that, as long as you can track sort of the IP, and then you can basically get to the identification. So I think I do think something along those lines, right? Like, for example, at Binance, we work with various what we call on-chain due diligence organizations like Chain Analysis, CipherTrace, CoinFirm, that actually do perform these kind of studies. Because at the end of the day, it's the database. It's a database that they start collecting, right? That's a combination of IP addresses and blockchain addresses, and they sort of pull them together. So I do think if the industry can sort of work together with these third parties to pull our addresses together, like even for Binance, we have at least our own internal database that we share with some of our peers for known hackers, known criminal elements, and known that come and do bad stuff on our site that we've been able to successfully block. So we actually kind of share that. We want to share that on an industry basis. So I think a lot of the deep down elements of it is actually a lot of the goals are the same. I think it was just basically to keep criminals off of our platforms, and it's just.
I'm glad to hear that because, I mean, what I see happening to a degree, hopefully an increasing one, is along the lines of what you were just saying, that a de facto industry volunteered standard of its own to ensure that compliance is there. And that will help, I think, a lot in relation to what regulators expect to happen. So the sharing of information is very important. In the old days, again, with analog type transactions, the compliance officers would do that. And in this space, I'm personally not sure how much of that information can be exchanged, but if you keep a lookout for suspicious transactions and you alert your competitors for the common goal of keeping the industry clean, I think that's a really important objective.
Yeah, then I'll ask one last question. Speak from your experience. How did you get different countries and different banks to start talking to each other? I think that's the biggest part, because you're trying to compete with each other on a daily basis, right? Like how did you get them to start talking to each other? That would be something that because I think for example, right now we're doing something where the compliance officers for the different exchanges, are in a chat group or in conversations, right? And then there is certain level of knowledge share, but at the end of the day, they're still your competitors, right? Like how do you get them to talk to each other?
Yeah, well, trust is a huge element of that, as in life in general. How far do you go or should go or can go under the law or in relation to the competition with, your counterparts? I think it's something that evolves. I think there are incentives and there are disincentives. The incentives include having an industry that is itself reliable and reputable, and in particular parts of industry. The more you build up your reputation as being clean, the better you are competitively, is my view. The disincentives are that, not always, of course, but the chances of detection of people who are not going to try to be compliant are rising, and there are serious consequences of that, certainly in terms of financial sanctions against industry players, as we've seen in the separate world of banks in the last several years.
Yeah, absolutely.
So I think building up trust between the big players is essential, and maybe the smaller ones, it'll take longer. Yeah.
Okay, great. Thank you very much for your time, Rick. And really appreciate your time. And then I really appreciate your knowledge and your patience in terms of sharing your career's work with us. And then I look forward to joining ACAMS podcast in the future.
Well, thank you very much, Wei, and to your audience. And I look forward to that as well. And good luck with the hard job of compliance in this space, but the ingenuity of technology people in this space is beyond my comprehension sometimes. So I have confidence.
Thanks, Rick.
Bye-bye.
Thank you for listening. I hope you enjoyed this interview as much as I did. If you like this show, please share this episode on Twitter, Facebook, Telegram, WeChat, or any other social media platforms. Please don't forget to subscribe to the Binance podcast, and see you next time.